Investors hoping for the so-called Santa Claus rally, which typically lasts from the final 5 trading days of the year through the first 2 of January. So Doug Flynn is joining us now from Flynn's Zito Capital Management. Welcome, Doug. What qualifies as a Santa rally? Why does it happen? And are we seeing one right now?
It certainly looks like we're seeing one. The first day was Christmas Eve, and you already got out to a 1% jump. But basically, in those 7 trading days, you typically have a 1 full percentage point outperformance relative to the normal 7 trading days. A normal week, it's up a little bit. It's up a lot more. There's only 2 other weeks in the whole year that actually have a higher performance than this week. So they call it a Santa Claus rally because it typically comes at the end of the year, and you're putting it at the backdrop of a couple of good years. You had 2 good years in a row of over 20% returns. So people are feeling pretty good. This is just the icing on the cake of an already good year.
Yeah, why does it happen? Are people just feeling optimistic generally right at the end of the year? What is the cause?
Yeah, I mean, it's a combination of at the end of the year, there's a lot of people on vacation. So what happens is we often say that the sellers don't show up for work, and there's just some buyers there at the end of the year. So that's a little bit of the backdrop. Now, it's not positive every single year, of course, but there's a little bit of that that goes on towards the end of the year. There's also some movement of some trading that people are trying to realign their portfolios before everything goes to print at the very end of the year. So whatever you've been doing can kind of get masked by what's going to go to print on the very last day of the year, and so that's going to go into the books, and so they want to make sure everything is cleaned up, so they're buying and getting the portfolios all set up on an institutional level anyway.
I know a lot of people on vacation, except for us, Doug, but we're happy to be here. You know, Bitcoin seems to be pulling back before the end of the year. What can we expect for crypto in the months ahead?
Yeah, the backdrop for that is, if you look at crypto overall, it has these big pockets of where it runs up a lot like it did this year, and then it can kind of sit there, and then it typically suffers a pretty significant drop, and then it stays lower for an extended period of time, which washes everybody out. And then, of course, when everybody's done selling it, then it rallies like it does. That's like it did this year. And that's been typically what goes on. So a lot of people are right here hesitant to say, even if I think the very long view is that this is going to go to 200,000 or 250,000, there might be some opportunities to pick it up a little bit below that 100,000 mark before it resumes that big move up. That's been how historically it goes. But at the end of the day, it's just there's a finite amount of it. And so theoretically, over time, that's going to drive the price. So it depends on just where you're going to buy it. And that's why we often advocate that you don't want to just chase it at the high. You want to buy it sort of strategically on an ongoing basis. So you're averaging in. Don't just buy it all now. But you should have a little bit of that for diversification purposes.
And crypto and AI driving major gains for top stocks this year. Who have been the biggest performers?
Yeah, I mean, right off the bat, you have this, one of the companies called AppLovin. You had MicroStrategy, you have Palantir, even Robinhood and NVIDIA are all tech-related and AI-related stocks. Now, some of them are very overvalued, and you have to be very careful. You don't want to chase things that are already at their high, so just be careful. Even though NVIDIA and was only the 5th best performing stock this year, it's still on top of amazing gains the year before. So what happens is this is becoming a very increasing part of the overall market. It's now about 1/3 of the entire market's already in tech. And so if you have your typical S&P 500 fund, and now you have a couple of individual stocks here in the tech area, you're probably very overloaded into tech. And so what we're saying is you really, next year, you need to look at some other areas that haven't really run up as much. The market's going to broaden out a little bit. It doesn't mean that tech isn't going to perform well. It certainly is, and there's a lot more growth there. But you just want to not put all your eggs in one basket, so to speak, and just look at some of those other areas. But that's the outlook there and why it's done so well this year.
And speaking of tech stocks, Apple closing in on a $4 trillion market valuation. What is happening to cause that boom?
You know, it's interesting because I keep thinking there's got to be another catalyst to drive this to the next level. What's it going to be? What's going to be the next iPhone? They need something else. And I think as it sort of went down a little bit before this recent surge, it's more about, I think, that there's something like a couple of 100 million old iPhones that essentially can no longer be updated. So if you think about it, that might be one of the catalysts. All these people are going to have to upgrade their phones, whether they like it or not. But there are literally hundreds of millions of those out there that need to get upgraded. and their big move into the cloud and everything that's going on there from that end of their business is a growing part of the business. And so that looks good for them. And they're very likely going to be the first $4 trillion company. Even though NVIDIA kind of crossed them a little bit earlier in the year, Apple came back strong here and now is back to the #1 position and may very well eclipse that very soon.
Appreciate the insight. Doug Flynn, thank you so much.
Great to be here.